Hello everyone, and thank you for joining today's webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. First, a disclaimer. House rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. Okay, so I was talking about last week or previous week macroeconomic events and data releases. And let's talk a little bit about it. Let us start with the official cash rate, OCR. Okay, what is the official cash rate or OCR? What it is? Let's talk a little bit about it. The official cash rate OCR is the benchmark interest rate set by the Reserve Bank of New Zealand to influence short-term interest rates and maintain inflation within its target range. Changes to the OCR directly impact borrowing and lending rates, which in turn affect consumer spending, business investment, and overall economic activity. The Reserve Bank of New Zealand, RBNZ, adjusts the OCR to either stimulate or cool the economy. A rate increase is typically used to combat rising inflation by making while a rate cut encourages economic growth by lowering inflation. So on April 9th, 2025, we got the OCR announcement. The previous number was 3.75, the forecast was 3.5, and the actual number we got is 3.5. So no change, in other words. Now, the Reserve Bank of New Zealand delivered an expected 25 basis point cut in the OCR, bringing it down to 3.5. Before the number was 3.75. So now we got the 3.50. So we got a 25 basis point cut in the OCR. The move aligns with the market forecast and reflects the central bank's ongoing effort to balance inflation control with support of economic growth. Despite the rate cut, the New Zealand dollar moved higher following the announcement. Let me show you the chart of NZDUSD currency pair. And let me go over here. This is the chart of NZDUSD currency pair right over here. This is the 4-hour time frame. So we got a nice bullish run in prices. Is the daily time frame. Overall, we keep getting bullish candlesticks. This reaction suggests that the market had likely priced in a more dovish tone or a deeper cut, and the fact that the Reserve Bank of New Zealand opted for a moderate adjustment may have been seen as less dovish than anticipated. Now, the market impact on New Zealand dollar versus US dollar is if the OCR is lower than expected, 3.50%, You know, if we get this type situation, then it means a larger than expected cut would signal increased easing, likely weakening the NZD. So right now, NZDUSD is moving up. It means the United States dollar is becoming weak and New Zealand dollar is becoming strong. Okay. So the overall analysis is that the April 9th OCR announcement confirms the Reserve Bank of New Zealand's cautious easing approach. While the rate cut meet expectations, the market response suggests traders were bracing for a more aggressive stance. As a result, NZD USD currency pair moved higher on the perception that the Bank of New Zealand may not be a dovish going forward. So my conclusion is the OCR decision is a critical event for New Zealand traders. Even when the outcome matches forecast, the market reaction can vary based on the Reserve Bank of New Zealand's campaigning tone and future policy outlook. In this case, the 3.5% number was interpreted as moderate, leading to NZD strength and a move higher inside the NZD USD currency pair. Next one is the core CPI. M over M means month over month for the United States dollar, and the most affected currency pair is the Euro USD. Now, what is core CPI? The core CPI, or the core consumer price index, month over month measures the monthly change in the average price of consumer goods and services, excluding food and energy due to their volatility. It provides a clearer view of underlying inflation trends, which is critical for assessing price stability and the overall health of the economy. Core CPI is a key metric used by the US Federal Reserve when making decisions about interest rates. Higher than expected inflation typically supports a more hawkish stance, potentially leading to interest rate hikes and a stronger US dollar. Conversely, weaker inflation may suggest economic softness, raising the likelihood of rate cuts and weakening the US dollar. Now, on April 10th, 2025, the core CPI report is we got the number at 0.1%. The forecast was 0.3. The previous number was 0.2. So the actual core CPI reading came in at 0.1%, significantly below the forecasted 0.3%. It's even lower than the previous number, which was 0.2%. So this downside surprise signals a softening in underlying inflation, which could influence the Fed to adopt a more dovish policy stance. Following the release, expecting a weaker US dollar as market begins to price in the potential for slower rate hikes or even rate cuts by the Federal Reserve. Let me show you the chart of euro dollar currency pair. This is the daily time frame of Euro USD currency pair, and overall Euro USD just keep going up, up, up. Looks bullish. Okay. So the weaker than expected core CPI figure reinforces the view that inflation pressures may be easing in the USA, potentially giving the Federal Reserve room to pause or slow its tightening cycle. This interpretation led to a sell-off in the US dollar and a push higher in the Euro USD currency pair. So my conclusion is traders closely monitor core CPI as it directly influences Fed policy expectations. The soft inflation trend on April 10th weakened the United States dollar, allowing Euro USD to climb. Going forward, market sentiment around interest rates and inflation trends will continue to drive the pair's direction. Okay, now let's talk a little bit about the previous week market trends. So I'm going to cover the Euro USD and the GBP USD, the British pound versus US dollar. So let's take a look at Euro USD currency pair. And if you take a look at a price chart of Euro dollar, overall it's trying to move sideways now, but previously we got a nice up run in prices. So if you go over further, let's try the weekly time frame. We got a breakout right over here, and this bullish breakout suggests that market might try to pause a little bit, or we might get a little bit drop in price action first before price action actually resumes the uptrend. It's quite possible that we get even a deeper pullback in price action. Regarding the GBP USD currency pair, let's take a look at pound dollar. So GBP USD currency pair, we're getting some divergence with RSI. However, price action just keep going up and up over here. We have a nice resistance up here at 1.3441. That's the level a little bit higher up here. So price might try to test this level, or usually what I've seen is that if we zoom out a little bit, you see we have this resistance over here. What I mean by that is, let me highlight this area over here and another one over here. So once market is going to test 1.3264 level, we might find some aggressive selling in the market. Okay, so we will see how it goes. Next, let's go over to current week economic macroeconomic events and data releases. So the fundamental analysis, let's take a look at core retail sales in USA, and then the unemployment rate uh, regarding the Australia. Okay, so we have the dates written over here, April 16th and April 17th. Okay, let's talk a little bit about core retail sales month over month. So what is core retail sales? The core retail sales month over month report measures the monthly change in retail sales across the USA, excluding autos, gasoline, buildings, materials, and food services. These categories are excluded due to their high volatility, making the report a more stable and accurate gauge of underlying consumer spending trends. Consumer spending is a major component of United States GDP, so this data is closely monitored by financial markets. Strong core retail sales figures typically indicate economic strength and could lead to tighter monetary policy from the US Federal Reserve, supporting the US dollar. Conversely, weaker data may signal a slowdown in economic activity, increasing the likelihood of rate cuts and weakening the US dollar. Now, on April 16th, the core retail sales month over month report is going to be released. The previous number was 0.3%. The forecast is 0.4%. The actual data did not release yet. So markets are currently anticipating a 0.4% rise in core retail sales, slightly above the previous month 0.3%. This suggests expectations of stable, if modest, consumer strength despite growing signs of economic moderation and easing inflation pressures. Traders will be watching closely for any surprise in the data, as it could influence expectations about the Federal Reserve's next move. A significantly stronger or weaker financial number could drive immediate volatility in euro dollar currency pair. Now, if you check out the chart of euro dollar currency pair, you see it looks quite bullish over here. And I'm showing you over here that we got a nice bullish breakout over here, and price is probably going to drop to retest this level, or it might fall a little bit more before it resumes the uptrend. So if core retail sales are higher than expected, like we're expecting 0.4% and we get more than that. A stronger reading would reflect resilient consumer demand, potentially reinforcing a more hawkish Federal Reserve stance. This could strengthen the US dollar and push Euro USD lower as rate hike expectations resurface. And based on the technical analysis, I'm basically expecting a drop in price action of euro dollar currency pair. So we'll see how it goes. Okay, so if core retail sales match the expectation is 0.4%, and we get the 0.4% number, then it means that a result is in line with the forecast, and which may lead to limited price action. We might get sideways price action inside the euro dollar currency pair. Okay. And let's assume if core retail sales are lower than expected, meaning less than 0.4%, then it means it's a weak financial figure, and this would indicate softening consumer activity, possibly reinforcing expectations of dovish Fed. This could weaken the US dollar and lift Euro USD. Now, Euro USD it's already overbought. If you apply the RSI indicator, go to the RSI. Okay, you see RSI is already hitting the upper level, the 70 level. So it's already overbought. So I would say the upside momentum is warning. The chances are price action is going to print a top and it's going to drop. So I don't expect more price action to the upside. I think price action is going to drop a little bit. Um, okay, so we will see what kind of a data announcement we actually get. So my overall analysis is, with recent inflation data showing signs of cooling and Fed officials signaling caution, the April 16 core retail sales report takes on added importance. It will serve as a key input for assessing the health of the US consumer, an essential pillar of the economy. So my conclusion is, until the official figures are released, Euro USD may trade, cautiously within a narrow trading range. However, once the core retail sales data is published on April 16th, tomorrow, the pair could see sharp movement depending on how the result compares to market expectations. A stronger number may pressure Euro USD to the downside, while a weaker reading could trigger renewed upside momentum. Okay, next one is the unemployment rate related to Australia. Now, what is unemployment rate? Well, Australia's unemployment rate reflects the percentage of labor force that is jobless and actively seeking employment. It is a key economic indicator that offers insights into labor market conditions and overall economic performance. A lower unemployment rate typically suggests economic strength and can support the Australian dollar, while a higher rate may point to economic weakness and weigh on the currency. Now, on April 17th, we are going to get an unemployment rate report for the Australia. And the important currency pair to focus is the AUD-USD currency pair. The previous number was 4.1%, the unemployment rate number I'm talking about. The forecast is 4.2%. The actual data did not release yet. The market is expecting a slight increase in Australia's unemployment rate to 4.2%, up from the previous 4.1%. And this modest uptick could reflect some softening in the labor market amid broader economic uncertainties. Now, the potential market impact this report is going to bring on the AUD-USD currency pair is that if the unemployment rate is lower than forecast, a stronger than expected job figures would signal labor market resilience and could boost the AUD, pushing AUD-USD higher. Now, if you check out the chart of Australian dollar versus United States dollar currency pair, the AUD is already moving higher. Okay, so we will see how it goes. It already looks overbought actually. So if the unemployment rate is higher than forecast, meaning 4.2%, we get a greater number, then it means a weaker labor market leading could raise concerns about economic momentum and lead to AUD USD weakness, potentially driving AUD USD lower. Now, my expectation is overall, I think AUD USD is going to rise up, but on a medium term basis, let me tell you, I'm expecting a drop in price action of AUD USD currency pair, and after that, I expect further upside. That's the technical analysis point of view. Okay. So the conclusion is traders should closely watch the April 17 unemployment report for clues about the strength of Australia's labour market and its implications for future Reserve Bank of Australia policy. A better than expected number may lift the Australian dollar, while a higher unemployment rate could reinforce a cautious or dovish policy outlook and weight on the currency. Okay, now let's go back to the slide. Okay, these are the pairs that we are going to cover. I'm going to cover the euro dollar and AUD USD currency pair. So let's start with these two. Regarding the euro dollar currency pair, we got quite a bullish price action. Overall price action just keep printing higher swing highs and higher swing lows. It's a nice uptrend going on inside the euro dollar currency pair. And I do expect kind of a little bit of a pullback, and then market may try to resume the uptrend. Regarding the Australian dollar currency pair, I expect price action to fall down. Let me go over here. The way I see price action is probably going to drop first before it actually resumes the uptrend. So, market doesn't move in a straight line. So some sort of a pullback is most likely going to happen in coming trading days based on the technical analysis, because we are approaching the old resistance high, these highs over here. So they are going to provide us some resistance or some selling pressure. So Aussie dollar is most likely going to fall down and then maybe resume the uptrend next week. Okay, next one is the US dollar versus Swiss franc. Okay, US dollar CHF currency pair. Okay, the USD CHF currency pair, if you check out the long-term chart over here, I'm going to start with the weekly time frame. Price action manages to breaks below the support level, and that was at 0.8327. Okay, so the way I see, we could get a pullback over here, and price action may try to rise back up a little bit, try to test the level 0.8327 level, which is way up over here from current price level. That looks quite possible. If you check out the smaller time frame, we're getting some sideways price action over here, and the way I see, we might get a retest of this trend line. You can go over here. So price action is probably going to test this trend line over here. Quite possible inside the USD Swiss franc. Next, let's take a look at spot gold. Okay, gold is actually going up. Overall, it looks bullish. If you check out monthly time frame, it's higher swing highs and higher swing lows. Weekly, same story, quite bullish. Got big body candlestick over here. Nice bullish trading week. So some sort of pullback is probably going to happen inside the spot gold, and then price action is probably going to resume the trend. Okay, so the way I see, if you draw a trend channel over here, you can see have this nice trend channel going on. This is the base channel. Price action just keep moving up over here. So the way I see, wait for a pullback, and after a pullback, price action is probably going to resume the uptrend. Okay. Okay, that's pretty much it for today. So what we have learned today, I've discussed about the core retail sales and the unemployment rate. We also covered the euro dollar, AUD USD, USD Swiss franc, and the spot gold. These are the assets to watch out for profits. And what you should do next? Well, you can check out the website. You can subscribe to our social media pages. And if you want to learn more about trading, visit the Trade Geek and access free trading courses for beginners, intermediate, and expert traders. So thank you for hanging around. See you at the next trading webinar on Tuesday, April 22nd, 2025. So that's it for the time being from my side. Have a nice day and bye-bye.